Ja, hallo, hier ist Michael Adams von Stock-Telegraph. Ich bin unten links in der Ecke, weil ich heute ein Skype-Interview mit Tim McCutcheon mache von Global Minerals. Global Minerals hatte ich ja zusammen mit dem Joachim Brunner vor, ich glaube, ein paar Wochen einen CEO-Roaster gemacht, wo er uns die Company vorgestellt hat. Wir beide, der Herr Brunner und ich, wir waren eigentlich relativ begeistert von der Company und der nächste Step für die Firma wäre gewesen, eine PEA rauszubringen, was sie nun auch getan hat, und zwar vergangene Woche. Die Überschrift, wenn man jetzt also nur wirklich kurz in die PEA reinschaut, sieht nicht wirklich gut aus. Und auch der Markt hat entsprechend reagiert. Ja, die Aktie hat doch gut verloren von 9, 10 Cent auf 6, ja, 5 bis 6 Cent. Und das war für mich einer der Gründe, weshalb ich Tim McCutcheon heute nochmal ja, gefragt habe, ob er mir ein paar weitere Erläuterungen geben kann, die ich natürlich gerne mit ihm. Tim, thank you for taking the time to talk to us, especially because you just last week had the announcement of a PEA, which is a milestone for the company. So I can imagine you're pretty busy. What I saw from the reaction in the market is that it was not in favor of Global Minerals, and so I think this is, if you ask me, this is because people might just took a glance, yeah, like a quick look at the PEA or the headline, and it came out with some numbers which are, let's say, under the average, yeah. But as far as I understand it, it's a different project, yeah. If you talk about a project being in Europe instead of being a project being in Alaska, right, or somewhere else. So I would like you to run us through the main points in the PEA, give us some background information, and also, yeah, tell us about these differences, and if you are also disappointed with the PEA, or if you think you're on the right track.
Well, sure. Let's start at the beginning. It's the end of the year, and there's this Canadian sort of tradition that any position that is underwater, you can sell, take the loss, and then count it against your income taxes.
Right.
I joined the company in June. It was down from the beginning of the year in June. And then, of course, with the silver slide that happened in October, all equities in the mining space slid, including Global Minerals.
Right.
So that's one factor that, again, I just don't have any control over, and it's something that is fairly typical at this time of the year. So that's number one. Number two, we did do a placement in the summer, in the late summer. That placement became unlocked. On the TSXV, when you do a placement without a prospectus, it's a 4-month lockup period. That placement became unlocked at the very beginning of December. So there may be some of that stock coming out. But I think it's probably very minor because 70% of that placement was taken by insiders.
Okay.
Insiders have not been selling. And if they were, you would know because you can always go to CanadianInsider.com and they show you all the selling insiders. So insiders aren't selling. It would be illegal for them to sell because we've been in a blackout period up until the PEA comes out. So, I think it's mostly due to people just wanting liquidity and wanting to take the tax loss break. So that's one thing. As far as the PEA is concerned, everything we talked about, when I mentioned all that, it was just sort of intuition, knowing sort of, enough about this business to sort of have an idea of what numbers make sense. But all of those numbers came true. Our pre-production capex is $25 million.
Right.
We meant the last time we said $25 to $30 million.
Yep.
Well, that's what it came in. The cash cost is a little less than $11 an ounce. We also mentioned something like that. That's what it came out as. So, the PEA is not a disappointment. It's. I think there's people don't necessarily realize what goes on with the PEA from the point of view that you have a whole bunch of independent consultants who put together data, and then they are, from a regulatory point of view, they're liable for the things that they say. So you have to be very careful about what you say. You have to be rather conservative about what you say, and you have to have all of them agree to the final text of what came out. And if you don't get their agreement, you can't publish it.
Right.
So We put together the PEA. We had everyone sign off on the final content in terms of the numbers that we were using, in terms of the assumptions that we had, and I thought that the PEA came out as we thought it would. At $20 silver, this thing does fairly well.
Work. Yep.
At anything above $20 silver, it starts to have massive leverage to the silver price. From 20. A 10% rise in the silver price from $20 to $22 per ounce is a 300% increase in cash flow.
Wow. Yeah, that's, as you may remember, this was one of the statements that Joe and myself had. That we are investing, or we like global minerals because of the leverage to a rising silver price, which we assume.
Right. And so that's the key thing. If you want to ask the really dumb, sort of cynical version, of course I'd like the numbers to be better. Who doesn't? But I can assure your audience that the work that was done in this PEA, as we mentioned before, is much more advanced than normal for this type of report. If you notice in the text of the press release, over 99% of the resource used in the mine plan was measured and indicated. So a very high statistical confidence level. Almost no inferred material at all was used.
Right.
So that shows that geologically, the mine plan is very, very robust. We're not sort of guessing that there's going to be ore somewhere. We know there's ore there.
Right.
So that's one of the key things. As I mentioned, of course, a million times, we have power hooked up, rail, road, facility, sites, foundations. I mean, this thing is ready to go from the point of view of a turnkey project. That's also mentioned in the report. One of the key issues is the metallurgy, and we talked about this before with the antimony causing penalties.
Yep.
But that can be addressed in the second phase of moving forward, which is going to the smelters with a bulk sample concentrate. They can take that concentrate, use it in their laboratory, and give us real quotes. Because as it was before, is I send them a piece of paper with the specifications of the ore, of the concentrate, excuse me.
Yeah.
And then they give me a quote. But you can imagine, there wasn't a lot of thought put into the quote because, all I could really give them was a breakdown of the chemical components of the concentrate.
Right.
By giving them 20 kilograms of actual sample, and I said, look, this is what you're going to be getting. And we're now collecting bids from multiple smelters. Well, then they kind of have to be a little bit more competitive in their bids because they're bidding now against someone else.
Right.
So one of the key aspects of the smelter issue is the antimony penalty, because when you're essentially what we're selling is a copper concentrate with a lot of silver in it. When you're selling a concentrate that's copper concentrate, the smelters don't like antimony because it actually hinders the entire process of recovering copper. So they charge you a penalty for that.
Right.
But antimony in and of itself is also a revenue-generating metal if you can separate it out. So the real thing to keep in mind is that a huge chunk of that $10.82 cash cost for silver, a huge part of that, not quite a half, but more than a third,
Okay.
is various penalties from the smelters.
Okay.
Primarily because of antimony. So any reduction in that penalty, which would happen as a natural course of giving them actual physical samples, all of that money goes straight to the bottom line.
And it will have a significant impact, or could? Yep. Okay.
Like dollar for dollar, it changes everything.
Okay.
So that's, again, people talk about, well, where's the upside? Where do we go from now? That's like upside number one with big flashing lights. In the market in which we're in right now, you have, if you're bullish on silver and you want to get leverage to the underlying silver price, which you can do with any silver producer, but then you also want to have that leverage to go from developer to producer. We are in a very, very small group of companies in that spot. And the key thing for us is that we're not in some backwater place in the tundra or in, the Mexican drug lord, taking over area. We're in nice, sleepy eastern Slowakei.
Right.
Which is very quiet, very stable, very calm. The local mayor loves us, wants us to put things into production as soon as possible. There are opportunities that I'm working on right now to get EU support for the project. Germany has an entire program to basically aid natural resource companies in the EU for the sole purpose of bringing natural resources to Germany for German industry.
Okay.
So that's a program that we're looking to tap into. It has to be done in coordination with the bank, but we're working on that right now.
Right.
So, the market has spoken, but the other thing you have to realize is that on an average day, our shares we trade about 35,000 shares a day. So, that's less than $5,000.
Right.
So, if someone wants to sell $20,000 worth of shares, the market's not very deep, and that has a disproportionate effect on the share price.
Right.
And so, if we have long-time shareholders who have bought at much higher levels long before I ever came on board, if they just want to get out of their position, there's not much stopping. That's the market. The flip side is that if you want to, it's a great entry point.
It also works in the other direction, right? If somebody wants, yeah.
Exactly. I mean, if $20,000 took us down 30%, right? $20,000 I think will take us right back up 30-40%. Because the market's just not that deep. And that's just because we're a small company. That's the downside of being part of a small company. Is that it's very sensitive to volume. You want to sell $20,000 on Microsoft, the market won't even care.
Yeah, that's right. No, I think from my perspective, it's really a couple of, let's say, bad circumstances coming together starting beginning of December, right? So it's the tax loss selling, of course, it's the underlying silver price, which is not working in your favor. Then there was this misunderstanding of the PEA headlines, at least, or ballpark figures, because they have been compared by the investment audience to other projects which are not that advanced, don't give you that security, and are not in mainland Europe, right? So, and then, of course, all of this together with the small liquidity within the stock, there was almost no way where the stock could go, right? So, but I totally agree from this point on, if you believe that silver will rise above the $20, $25 level, which I do, for next year and the coming years, it's a great opportunity to get in. I was asked by one of my readers a question: why did you calculate with the $20 silver? And I think that because silver is trading way lower right now, so but that was probably just because at the beginning when you started, silver was trading, or you used an average or something like that, right?
Well, I mean, look, two things. If you take the 3-year average silver price, it's about $23 an ounce. If you take the current silver price of $17 an ounce, you average the two, it's $20. I'll be the first to admit it's sort of a random number. It's 20 is a nice round number. When we started the PEA, we were a little above $20 an ounce silver. Until the first week of October, we were $20 silver. And so, if you remember in our conversations that we had in the past, the idea was to come out with the PEA at the end of October. Basically, the process of peer review, where basically we had our independent consultants that we hired, they put together a plan, but then we brought in another fellow to basically check up all the work of what our consultants did. That took a little bit longer, unfortunately, than we anticipated, and it was at that time when silver basically, had a break. So that's it, and I don't think that I'm being, I'm not trying to hide anything. It is what it is. At $18 silver, the project has an IRR of 0. That's out in the press release in plain sight. And, again, I fully recognize that if you don't think silver prices are going up, then you're not going to buy global mineral stock or any other silver.
Right, because I was just about to mention that most of the silver producers, even the bigger ones, can't live, at least not for a longer time, can't live with a silver price below $20.
Well, that's right, and this is not so much an investment case. It's just to help your audience put things into perspective. If you put things into perspective, pretty much every single silver mine in the world right now, primary silver mine, at sub $17 silver or $17 silver, on an all-in sustaining basis, they're all losing money.
Yeah.
On a cash basis, most of them are breaking even or losing money. That's not to say that that's an investment case.
No, of course not.
What it does do is it puts the PEA into perspective. And what it also highlights, though, is this antimony issue, because if a little bit of change in the smelter terms for our concentrate will have a huge impact on our cash cost, per ounce, because any change in the antimony penalty goes right into the cash cost per ounce. Because the actual, if you get a chance, read the PEA, you'll see that, the actual cost of mining silver it's not that high.
Right.
It's the metallurgical features that we've chosen to outsource to someone else because it's a cheaper way of dealing with it now, as opposed to dealing with it than to try to put together a metallurgical solution.
Yeah.
One of the complaints that I've got, and this is something that we've spoken about, is one of the complaints is, well, why didn't you go down the whole technical route and recover antimony and everything else? And we may have been able to do that. But then, we'd be talking about $150 million CapEx project.
Yeah, which is not it's not realistic. Yeah, it's not realistic, at least not in this environment for a company the size you have, right? So, yeah.
And so, there's a joke amongst the geologists is that the best way to ruin a deposit is to drill it. The joke, I guess, for Global Minerals is that we've actually been very, very honest and forthright about the PEA. We have definitely used to our advantage every single place where we can tweak it out, tax loss carry forwards within the mine plan. We have tweaked the PEA to take into account all the natural benefits that we have.
Right.
But it's a realistic plan. It's a totally realistic, doable plan. Whereas if we were to put together a $150–200 million CapEx project, I talked about building a smelter in eastern Slovakia and turning the ore site into some monster. It may have better math on a piece of paper, but it's never going to happen.
Yeah.
And so the bet that we're making is that investors will realize that our mine plan is doable, and if they read closely in the opportunities part of the press release that we put out, they will see that recovering antimony, increasing the size of the resource, moving down the value-added path, basically going from a concentrate producer to something else. Those are all opportunities that we can invest in the future, but to throw money at it right now, I think, would be sort of foolish. Right?
No, I totally agree. And again, this year's kind of almost done, yeah. And luckily, it's almost gone. So for 2015, my crystal ball tells me that it's not only the silver, the underlying commodities, but also we have a huge run into the junior mining sector again, and because people are. They're not risk averse, right? But they're trying to lower their risk. And I think if you can come up with the financing, yeah, that's your job. But if you can come up with the financing, like the risk on the execution, yeah, which usually is also a big part, even if the financing is in place, the execution risk on your end is, I would never call it zero, but very, very, very reasonable. Yeah.
It's very low. And that's again, so for your audience to understand, because a few people have asked me this, and it's myself and the Global Minerals team, we're not delusional. First of all, we are at a PEA basis. It's a very, very advanced PEA, but it's not a feasibility study. And so there's still a little bit of work done to tighten up from PEA to feasibility study. So that's number one. Which means number two is, no one is trying to raise $25 million right now.
Yep.
First of all, we're not in a position to raise it because the level of our study isn't at that level for a bank. It's certainly, for us, it's very comfortable. For any sort of miner who's looking at our project to sort of evaluate it, it's a very advanced study. But from a banking point of view, it's not bankable at this point.
Right.
And what does that mean? It means that we're not, people are, a few emails I got that people are worried that we're going to try to run out and raise $25 million.
Okay.
No.
No.
we do need to raise some more money. At the current share price, it makes that very challenging. What will probably happen is we need to just buy ourselves a little bit more time to let the equity market and the silver market kick in, and to get us past this winter season when people are basically, changing their portfolio structure. If they bought into global at 25 or 30 cents at the beginning of the year, now they're selling out. They take the loss. They go file their Canadian tax files, returns.
Yep.
They get the credit for the tax loss, and then in the new year they look at everything with a new fresh eye.
Yep.
And we need to get through this period so that people can look at. So technical factors won't be an issue in terms of moving the company forward.
Yeah.
I to your audience, we'll let them know. I am not delusional. I'm not starry-eyed. I'm very aware of where the company sits right now.
Yeah.
It's something that we're working on very carefully. When the PEA came out, I was on the phone all day. I felt like a telemarketer, just talking to everyone, telling them the story.
Right.
Anyone who expressed any interest in the company, they were on my phone call. I was calling them, talking to them, walking through the numbers with them. So, there is an understanding out there, and I just like your audience to understand that in the junior mining sector, if someone wants to sell $100,000 worth of stock, it has a hugely disproportionate effect on share price.
Yep.
Which is essentially what's happened to us.
Yeah.
And likewise, if someone wants to buy $100,000 worth of stock, it has a hugely disproportionate effect. And your investors should be aware of both, right? If they see share price go parabolic, they should be like, wait a minute, what's going on here?
Yeah.
And same thing going down the other way.
Yeah. So the only thing that you should, because you need to raise money over the next foreseeable future at these, let's say, lower levels. So I guess I don't have to tell you, but it's in the best interest to raise as small as an amount as possible, right? But of course, keeping you alive, yeah. But I know that you are in personal contact to all of your main shareholders, like you have a lot of long-term shareholders. So and that's probably the first guys you're going to talk to if they are just as a reward for them, right? So they have been supporters of the company for quite some while, probably at a way higher price, yeah, just to give them some incentive. That's, I guess, what you're going to, I know you, so I think that's what you're going to do. And this is probably what people will accept, not this year, but in the next year, yeah, when they kind of rearrange their portfolio and they get the opportunity to get to average down by participating in a private placement, my gut feeling would be that a lot of them will answer your call.
Well, I don't want to call out anything yet.
No.
Clearly, right? Clearly the people who are shareholders have a deep vested interest in making sure this thing continues to move forward. And I'm a shareholder as well. I participated in the last placement. My hunch is that the next fundraise is going to be two things. It's either going to be, a small amount of money cobbled up together between sort of existing shareholders and people who now express interest in the company since our marketing outreach. You got to remember that the marketing that we started with you and the marketing that we started in person in October, it's really the first marketing this company's had in years.
Right.
And it's certainly the first marketing the company's had with me, at the head of the company. So there's a whole new audience group that never even knew about this thing. They first found out about global minerals in October. So tapping into that resource, it's going to be something like that, or the fundraise is going to be probably, from one person or one company.
Yep.
As a strategic investment.
Investment, right? Yep.
Right. So you put in $1 million, you get a third of the company, and then $1 million would basically give us a time to really be a lot more methodical about the current situation.
Right. Okay. So I think that was a good overview, because again, I think this the PEA, just the press release, raised a couple of questions. Yeah, so it's essential that you can address them, and so even for me, it was good to hear your explanation on a couple of these numbers. So I would suggest that we are going to hook up in the next month. Yeah, so in January, and then you can give us an update and what happened. Yeah, we have the holidays coming up anyway. So I keep fingers crossed. I still like the project, and I think it's, if you believe that silver will go up to $25, $30, which I do, right, over the next 2 to 3 years, getting in at this level let me just see, the stock is trading right now at 5, where is it? Yeah, at 5 cents, right? So it's almost a no-brainer. Yeah, if you believe that the company will survive and then will be able to make use of these rising prices.
And just make it clear to your viewers, if you have any questions at all, comments, you want to talk to me, on our website, there's info@globalminerals.com that goes straight to me.
Right.
I'm more than happy to answer any questions, comments you have, concerns, any sort of advice you might want to have. We're a small company, and the key part of that is being available to shareholders and potential shareholders.
Right. Thank you very much.
Thank you.
Bye-bye.